We are talking about a really interesting one today, lying on your tax return. So this new survey says 13.4% of Americans have admit they've taken some creative liberties on their tax returns. So Steve, what do you think about that stat?
Well, I definitely would think 13.4% is pretty generous. I don't know who would reply to a survey taker, honestly, that they lie on their taxes. So, hey, kudos to the 13.4% who actually admitted it.
However many people may be doing this, what types of lies do you think are the most common when they're filing this return?
Yeah, I would think that the two that would first come to mind are they're certainly going to lie about their income. There may be folks who have second jobs and they may accept cash payment for certain things. They may or may not disclose that income. I must say, you do have to disclose any and all income to the IRS. And I also think the other side would be maybe taking some excess deductions, whether you're an individual and you may take some extra charitable deductions or other things like that. Or if you're a business owner, you might take some extra business deductions. But yeah, 13.4%, I bet lunch is really low.
Yeah, I imagine that there are some folks that are not exactly wanting to disclose that. What are some of the penalties potentially for that problem?
Yeah, if you are audited or it comes to light that you lied on your taxes, you would certainly have to pay interest and penalties on any undeclared income or any tax liability that would come if they recalculated your taxes accurately. So in all seriousness, it could become real significant. And also, I must add, anybody who applies for a mortgage or a business loan or a car loan, potentially, where you have to submit your income taxes, if you're submitting falsely prepared income taxes, you're liable for fraud. And not only can the IRS come after you, but maybe the mortgage company or the bank that you're getting a loan from can come after you as well. So all kidding aside, this can be serious business.
And we had discussed something similar before. Things can get even more sticky if a divorce happens or if someone even passes away. What can you tell us about that?
Many of our viewers might be in second or third marriages, or they are going through a divorce, unfortunately. You always have to be careful. Anytime you sign a tax return, you potentially could be liable. Now, there are forms you can fill out that you can claim, ignorance, that you didn't know what was going on, but that's a much more difficult road to hoe as opposed to reviewing it prior to filing the return. But, a new spouse or a new partner might not have been honest with their taxes previously. So you just want to be sure that, when you file these returns, you dot all the I's and cross all the T's and make sure they're accurate.
All right. Thanks, Steve, for your time today. We'll post more of this on our website, ktnv.com, and we'll be right back after this.